discrepancies in its derivatives portfolio that have only been disclosed with a lag to uncertainties over leadership. Things have not been quite right with IndusInd Bank of late, leading to the stock crashing over 25% in trade and erasing more than 18,000 crores of investor wealth in just today's trading session. Let's start with what's happened with the derivatives portfolio. Now, IndusInd had made some trades to hedge categories of foreign currency borrowings and deposits with its internal desk and not directly with an external counterparty, a practice which the bank said it has been following for the last 5 to 7 years. But the management claimed that after the September 2023 RBI guidelines, which were applicable from April 2024, the bank realized that these trades were not validated properly, leading to the discrepancies. Now, the bank says the hit will be potentially 2.35% of its net worth, which is about 1580 crore rupees, which the street believes could even go up further. Now, the management insists this is not going to impact the business prospects and an external agency is reviewing the matter. The final impact is expected to be known by March end or April, but it is not the amount itself which is the sole concern. The credibility of the bank is in question, as several brokerages point out, because of the near 5 to 6 month delay in reporting this discrepancy. And the street is also concerned about the timing of the incident, because you see, first you had the CFO resign in January, just ahead of the third quarter earnings. Then you had the CEO Sumant Katpalia getting only a 1-year term extension versus 3 years sought by the board, and now this latest incident. Now remember, it was also under Sumant Katpalia's tenure in 2021 that we saw that infamous tech glitch at the bank's microfinance subsidiary that had led to nearly 84,000 loans being dispersed without the customer's consent. So the discomfort of investors is on the robustness of the bank's internal process and compliance and the broader issue of trust and credibility. On the CEO tenure itself, Sumant Katpalia told analysts in a con call that he did not know why he got only 1 year's extension, but that these discrepancies would have had a bearing on this term because RBI was aware of the issue. He went on to say that he thinks RBI may be or uncomfortable with his leadership skills in running the bank and that this was a test for IndusInd. He added that the board is going to meet in the near future to evaluate external and internal candidates for the CEO position, and he did not know if he would be considered. But if you look at the brokerage views on the matter, now Morgan Stanley says there will be a downside risk to numbers post this disclosure. Macquarie says this could be one of the reasons for a suboptimal CEO tenure extension. Nuvama says the timeline is discomforting, earnings will be impacted, while Kotak Institutional Equities adds that the bank's credibility is at stake and rebuilding trust is going to take time.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.